Good morning, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin, and today is Saturday. I'm here to give you all an update on the market for this week. This has been an excellent week in the market. Hopefully, you all have been trading. But before we get into it, make sure you like, subscribe to the video, hit subscribe button so you get notified when I make videos. All right, so let's talk about it. We know that last week was earnings, big tech companies, and the top five in SP 500. All of them coming through. Hey, who knows, right? We saw some bad earnings and we saw some good earnings. I believe that Apple actually saved the market this week. Apple came through and beat earnings and beat revenue and pretty much showed the market how it should move. On top of that, we had some great GDP, better than expected GDP numbers this week. So that also saved the market. So we may be looking good going forward, right? We know that next week we have the Fed speaking, which could have potentially been bad news, but as of right now, things are actually looking good. So I got some good news for you all for this week for the video. So let's take a look at it. All right, so we saw the Dow on Friday up 2.59%. We saw the S&P 500 up 2.46%, the NASDAQ up 2.87%, and the Russell up 2.25%. Like I said, this is a great week to be in the market, right? We saw things go straight down. We saw them go straight up. If you've been rocking with me, you know that we can make money on the way up or the way down. So put options paid and call options paid out. So look at this. Apple was actually up 7.56% on Friday because they beat earnings. Let's take a look at Apple earnings. Apple actually came through and beat the earnings per share by 1.44% and beat revenue by 1.55%. On my last video, you all know that I said I believe that Apple and Amazon would actually be negative. Turns out I was wrong about Apple. However, I was correct about Amazon. If you had a put option on Amazon, you should have made money. This bad boy tanked overnight, right? After they reported earnings, they tanked. That's because there was no good forward guidance on this company. So, hey, hopefully you all watching. Hopefully you made some money because I told you what I expected. It was a major heavy drop and it should have been a lot of easy money. If it wasn't for the GDP numbers and Apple coming through, we would have probably had a red market most of the week on Friday. But Apple came through and GDP came through and they pulled us out of there, right? So let's take a look at the market. We got to take another look at this thing, right? We already know year to date, we have been beat down. We are down 18.67%. We have managed to pull ourselves out of that 20% down for the year. But based on our lows, let's see where our low is. 3585 or 3577 was our low. From those lows on SP 500, we are currently up 9%. You all know we got to go up about 20% in order for us to clear from the bottom now, up 20% from the bottom for us to start a new bull market. And based on the research I've been doing, and we're going to take a look at that, there's a very high potential that we should be doing good. The Fed could slow down on the rate hikes due to inflation coming down and good GDP, right? Good GDP means what? We're coming out of the recession. That doesn't mean we're going to go back into one in 2023, but as of right now, the economy is starting to look healthier. It's starting to look healthier, right? So we gotta be aware of these things. So right now we up at 9%. We need another 11% for us to come out of this bad boy. The fear and greed index, we are at a 61, showing some greed. Now I know 61 showing some greed, but we're still lower than ever. I know it sucks, but we can expect to see some pullbacks and some major run-ups, hopefully in the short term, especially with the news. Now, I think next week with the Fed meeting coming, that could definitely be a major catalyst, especially if they come in and they give us some lower than expected interest rate hike and maybe some positive news about inflation being pulled down. Man, this market could take off to the moon. So that's what we're hoping for. That's what we're looking forward to. I'm looking for a major rally. I don't know if it's going to happen, but I am definitely hoping for one, right? So here's the news I found, right? Nice little article. Dow closes nearly 200 points higher on better than expected GDP report. NASDAQ tumbles as Meta shares plummet. Y'all know. I told y'all about Meta. I told y'all about Amazon. And I was wrong about Apple. I'm okay with saying that. All right. So the part of this article that I really like, and you all can Google it, go in here and find it yourself if you want to read the full article. But where I like, the U.S. economy grew at a 2.6% annualized pace for the period against the Dow Jones estimate for 2.3% growth. The Bureau of Economic Analysis report showed the chain weighed price index, a cost of living measure that is adjusted to reflect change in consumer behavior, rose 4.1% for the quarter, well below the 5.3% estimate. Headline inflation rose 4.2%, down sharply from 7.3% according to a gauge the Federal Reserve uses, right? So that's great news. Inflation is down. GDP is up. The economy is starting to look healthy again, you guys. The economy is starting to look healthy again. This week, when the Feds speak, November 2nd, I believe it is, that is going to be the tell. That is going to be the tell. It is going to tell it all. We're looking forward to Jerome Powell coming in, giving us some good news, good speech. And man, I'm really hoping to hear some good news from him. That offered hope for market observers. That's why the market ran up so high. Looking for data indicating inflation was coming down, which could lead the Federal Reserve to ease rate hikes after the November meeting. And pay attention to this, right? This says after the November meeting. So they may still come in aggressive in November. But December, we may actually get some slack. You all. So Christmas, right? Christmas, early gifts. I love it. The GDP release this morning was a Goldilocks number for risk assets, said Hodge. So really, still the technology sector continued its recent woes, holding the broader stock market back. Meta shares plummeted 24.6%. You all, I think it's time to get out of Meta. I hate to say that. That is not financial advice. But I do believe that I am going to be selling my shares of Meta because, man, this bad boy has been taking a beating. And I don't see them being profitable again for quite some time, especially with the metaverse tanking like it did. It didn't perform as expected. So, hey, when the business model changes, I change with it, right? You all know I like to invest long term. But when I see news like this is a sure sign for me to get out of some of my plays. So, hey, that's what I'm doing. So that's really what I got for you all, man. I mean, this is a crazy week in the market. Next week will potentially continue to be crazy, especially with the Fed. I actually expect Monday to trade sideways, but I don't know. I haven't got the earnings report yet, so I'll take a look and see if we got earnings next week or what companies are reporting. But the big dogs pretty much got it out the way last week. I'm hoping that some of this GDP may push us to the upside, but I don't expect things to just really run up like crazy. So, I mean, that's really what we got to look forward to. So, I thank you all for joining the Journey to Become Wealthy. Hopefully you enjoyed the video. Hopefully you all made some money this week because it was a crazy market. It was a lot of money to be made. So, hopefully you all did. Make sure you like, subscribe to the channel. Hit that subscribe button. And I'll see you guys later.